What up, everybody? All right, let's get the music started here. Welcome, welcome, welcome. How's it going, everybody?
My friend, you say.
All right, check the music going on here. Good morning, team. How's it going? All right. All right. What up, everybody? Howdy, friends. Let's get ready to get going. I don't know how often they update this Robbins Cup leaderboard thing, but it seems like the March 8th update didn't pick up my 50%. I should be in 5th place in the world right now. I just wrote them an email. Sorry for the delay here to complain. We're paying ridiculous amounts for commissions for this quote-unquote platform service transaction fee, whatever. Here, update me in real time. Get me up there, baby. All right, let's get ready to go. Let's look at the morning news. But anyways, technically speaking, I'm 5th place, so we'll see if it updates today, but after Friday. No news today. Tomorrow, nothing really. Gapping down, resilience high. Oops, let's go here. Switching to the M contract today, everybody. So just take a look at that whenever you watching me. We did hit bottom DD band in the S&P. I mean, on NASDAQ, we're at bottom. Okay, let's go ahead and pop one contract on the first red candle at the open price. Let's get it through the. Let's get it through half gap. Let's get it yellow line. Take a quick dive. Let's see what the first test is down here. Remember, we're irrational, so you gotta be very careful here on these modes here. Okay, 88 and drops about 5 points lower. So we have DD float lifting us off the ground today. Let me phone up real quick. Got CPI tomorrow. It's gonna be a big moving day today. Let's let this dip real quick and then see if I can play off of it. Look at QQQ. All right, BSU today on Qs. See if resilience plays around, because I already tapping DD band bottom Nasdaq. I'm gonna be very careful launching out the door on this. BSU is longing to hedge pressure on that side. That is looking kind of the same way. Bear short up on the S&P, top of bear zone. Glad I didn't touch it. I'm gonna let this play. Positive resilience could lead to a push through the gap to hit bull zone, so we'll see how this works. Looks like already Nasdaq is trying to move its way down, trying to hit that DD float again. There's that first red on Nasdaq. Feel a little nervous to touch this right now. This is a short, like a very small move from here up. Like I said, I might want to lay off of this one really quick. Okay, we just hit DD band and bottom Nasdaq. Can y'all hear me? Can't hear me? Hold on, let me check. Turn up your volume. What's up, Angel? You hear excited to learn how to use these advanced features? What's up, man? Good morning. All right. The DD bounce you took on Friday was mainly due to DD or red? No, Lee, always DD. Yeah, all bull zones are going to act as support when you have a positive DD. And like if SPY falls from one to the next one, it's always going to act as support. It may not bounce, but it's always a risk to take. So if you have multiple bull zones, see like you have one here and then one here, it'll hit the next one and bounce on the way down usually. That's the bet I did take on Friday. So I'm up 50 something percent. I'm in 5th place on the Robbins Cup. I just wrote them an email, just letting you know. Why is my name not listed on your leaderboard? So I would be in 5th place now as of Friday. The March 8th update, which happened this morning, doesn't list me on there. So I'm literally glued to my email, and I'll let you guys know this morning what the state of that is. Maybe they're a day behind. Who knows? Maybe death update for Friday was for Thursday. Who knows? But if I'm not on there tonight, I'm gonna be skeptical of their reporting being accurate. Now I heard reports that it's delayed and that's not accurate sometimes, and I think Matt said that he saw that there was like 3 or 4 days where it didn't actually update when they said they did, and it's like, I don't know. You pay this platform fee. It's like transaction fee. It's literally like for every $100 in commissions, you pay like $80 in platform fee as well. Or transaction fee, they call it. According to them, transaction fees they use to track the contest with. So it should be in real time. To me, it feels like somebody just manually goes in there and types this in. They get an intern doing it or something. It feels like it. Not updating in real time. It's not updating the right. Who knows? Who knows? DD band seemed to be incorrect today. So this is rollover day today. So, hold on. I don't think I would say that they're incorrect. They're just, let me go here really quick. Let's get on here. Hold on. ENQ. Did we tap DD yet? No, I was like, yeah. Oh, I see what you're saying. This still the basis. Oh, okay. So DD band really hasn't broken yet. Okay. I see what you're saying. It's rollover mechanic. Let me, and actually we should be basing ours on, oh, here, let me show you something. When you go to here, hold on, connections, DD. ES, we can change it here. I think this updates, hold on, let me go back to it really quick. M24, let's start updating all mine to M. Let me make sure I actually, EP. And so you're going to have 5164, 5099. I double check that it is there. Let me show you how you would do this. So these are the current bands right here for the M contract. Let me see this really quick. Oops. Hold on one second. And that's interesting. guess. Okay, there's some kind of glitch going on here. Let me try something really quick. It's updating the field above it. I'm not going to make it long just yet. Okay, let me fix this. I'll fix this today. Let's see. See, this is shown correct on the chart that you have it here. With DD. So on the chart, it's going to draw them correctly on the chart. Whatever contract you have, we have them done for all the contracts. So here it's going to be here. If you're doing it on Thinkorswim, all you need to do is just manually move, like that day that it rolls over. It's not going to pick it up until, like, I know what you're saying. This is what you're saying right here. On Thinkorswim, it's still showing like that little indicator that everybody passes around. It still shows the previous contract. But now DD bands are based on the current contract. So it's like at close is when it does the basis, and at close it was still this on the continuous contract was still H. So what it will do is it'll just be off for a day. So if you're using Thinkorswim on rollover day, you just need to manually do it on that day. Johnny, just FYI. It's not incorrect. It's just showing the H contract instead. So what you want to do is just use the numbers from your DD table here and just draw manually for this day. But I did find a bug trying to switch the tickers. Look at my screen real quick. Watch. When I try to change in Q to M, it's changing the field above it. That's weird. So that's a bug. Switch. I switch tickers and I switch months. Yep, no problem. Okay, so the question is, resilience is good enough to take along here to go through there, but it's also liquidity pocket. Market's gonna be quite random from here. I don't know if it wants to sell off just yet, but it's not a clean trading day for me. Eyeballing Nasdaq really quick. Nasdaq did tap the lower DD bands already again. So there was no error on DD bands. You had me scared when he said that. Interesting to see. Okay, so NQ is trading up a little bit. SPY's starting to trade down a little bit. Question is, do we get one more attempt at bottom DD on SPY? That's what I'm looking for right now. We're also at a major yellow line on Nasdaq. This is also MHP estimate in the overnight. So about 51.73 is that support. It's decent enough to maybe make an attempt, but see, bear zone right here is always, and I'll be over trading if I try to do it. Let me show you guys really quick what I'm talking about. Let me draw on my screen. Too much already happening this morning. How are y'all doing, by the way? Love you guys. Y'all have a great weekend. Dude, I was all excited to come on here and see myself in the top 5 in the world. Technically, I'm top 5 in the world. Let's get a round of applause on the rockets in chat. I can tell you, y'all saw my account, right? 50%. Leaderboard. Look at this. Again, I wrote them an email this morning. Look, March 8th on Friday. I should be right here. 50% right here. Number 5. So unless this update Friday is from Thursday, then that's interesting to know that it's a day behind. Either case, we'll see today when they do the March 11th update. We'll see. But I should be in 5th place. I was super excited. Like literally, I glued myself to Leaderboard all week, and I was like, finally, you know, we'll see my name up there. So I emailed them, I emailed EdgeClear, I emailed everybody, and I'm just like, what's going on? We'll see let's see what happens. Important stuff, man. All right, so let me get the pencil out. It's not a good setup today. I'm going to tell you, if there's any long, it's going to be very, very short-lived. It's not going to be a big run-up today. If you guys can see that, everybody, right? Chat, y'all got to see that today? All right, so look. Bear zone is always resistance pressure off a bear zone. Resilience goes to here if positive enough and rational. This is if res greater than 0. But res greater than 10 when you have like DD band tap or irrational days. So we're gonna need a lot of resilience to get us there. And resilience is not even close. It's random today. So the idea that there's not enough resilience to clear the box. The resilience is an indicator that looks for going from this side of the box to that side of the box. The redistribution zone is based on this, right? And this number being negative is also, we'll go bear zone resistance. Res less than 0, resistance off of the middle. These are all of our rules, and I'll show them to you in just a second if you guys hang tight. The DD rule states the high of the day is going to be 512. There's no way we're going above 512, so the option sellers will know that you can probably decent to sell call credit spreads above 512. So here, this is high a day. DD rule, it's the maximum here. So it's gonna be very rare, very rare, very rare. I'm talking about the rarest of the rare, very rare to break 512. It'll be rare to break even here. Expected is here. Expected is this today. Now the thing is from 51.78 to about 51.60 something and change. 51.63. That's about 1.5 points below current value. About 9.5 is probably DD. Probably, and then breaking this is rare. That's the rare case, breaking DD. So expected is here. I guess I drew a lot of green. Maybe we should just put something that's like a little easier, like orange. So expected is this right here. Don't want to trade it because I don't take short trades in a bull market. So it's a sit out day, unfortunately, according to our rule set. I don't want to short because I don't bet that the markets fall apart, but this is certainly not a long trade. You guys all see how this works today? Love you guys. Love you. All right. My mic picks up the music feedback every now and then. Oh, thank you. Let me turn this down. Appreciate you. Okay. Chase says, good luck today. Rollover gets weird. Good luck. Yeah, this is a weird day today. In all honesty, and futures also has an effect. And actually, you guys might not know this, but anytime you have futures and rollover, you can do the contango trick. We use this for triple B. What you want to do is, let me show you. You always want to find that halfway point. So it's almost like the triple B equation. You find the halfway point between the two contracts, and that's going to be quote unquote like your triple B in the same aspect. Very close here, like Nasdaq, for instance, and you're going to see volume at that pivot. It's a really cool trick. I'll draw it right here with the white dashed. And so as the contracts try to reconcile, especially around the options that people trade on this index, you're going to see that the futures are usually used to hedge those trades. So you'll see them attempt to reconcile by, it may look like it's filling a gap. You may in your brain say, oh, it's like it's filling a gap. It's not really a gap. But there's that halfway point. And let's see if NASDAQ got even close. See how NASDAQ is like literally trading there with high volume? It's a really cool trick. So that's going to be the support that you want to look for between the two contracts reconciling. Any lot, and it's equivalently at the DD band of all places. So any, wait, hold on, wait, that's not the real DD band. No, forget what I said. That's but where that is, see how there's volume pivoting here? We can do the same trick on the S&P. So you're going to utilize that as support and also decision making for a greater market. Now we don't have a rule for it, but you can still see that there's volume there. It's a neat little trick. So any downside outside of DD bands today can also play right there in that same spot. Y'all know the triple V trick, right? So this is a little calc you do here. Just estimating. So right there, it's 51.63 and some change. So any downside, we'll look for interact with this. Like I have a feeling the S&P is going to take one more dive down while resilience is trying to get slightly better. Trading in the middle of the range is always a terrible idea. Any trader trying to pull the trigger right now is dice rolling in a random market. Odds are it's coming down, but it might go up before it goes down. So either case, I want to trade the extremities. I'll buy the dip today. It's not going to crash today, or I'll short the high today if we hit bull zone, maybe. And it looks worse enough. I'd scalp across the liquidity pocket, but we'll see. Okay, so watch today at this 51.64 level. Watch this. Okay, I'm gonna draw a little line there. We're on the M contract today, and again, that's like right at DD band. So let me also make this white so it's easier to see. So thank you for guys joining today. Coming in and checking out what we're doing here. 51.64. Nothing yet. So we're gonna be patient on this one, right? It's this world-class trading you're seeing. You don't just chase every little thing that walks around. So if we start breaking this halfway point, the futures contracts, and I don't say fill the gap because there's no gap to be filled, but the contracts will the prices will reconcile. That's a better way to put it. Because the contract didn't gap at all. The contract is continuously traded. When you roll over on your charts, it appears like there's a gap. So all you new futures traders out there, when you're rolling from that H contract to the M contract, so from March until June, you may say, oh, the S&P gapped up today. When they really didn't gap up because the March contract is still trading exactly like this. It's just down here. The June contract has always been trading just like this, except it was up here. There's a little bit of contango in the contracts, which means one of them is priced slightly higher than the other. So because of that, the halfway point between the contract at any time of rollover, especially around key points like monthly options expiration, the halfway distance between two contracts at all times gives you high volume, not just on any specific day. So it actually serves as a pivot a lot of the times because it's pricing in, oh God, there's a whole, I have so many webinars on this topic. Let's avoid that. Go watch our videos, especially during our extended trial. There's videos on the Triple B that talk about why this effect is there. Why is there volume at exactly this line, the halfway point between the two contracts at all times? So when that forward curve starts to flatten from contango to backwardation, there are some weird effects or possible backwardation. So the price starts trading close enough that that halfway point is breached and fought over. Just like Triple B, you'll see high volume and capitulation can take place, which can actually flip the two contracts around and flatten out that curve. So whenever the two contracts reconcile, your forward curve flattens. So while in stocks, you might call that process like filling the gap. In futures, we call it the forward curve flattening. When the forward curve flattens, you tend to have a lot of effects because futures are used as hedging instruments. And so you tend to create volume at that halfway point, just like you do in anything related to trading. Halfway points are just magical volume things, create volume. And that's just because anytime you have a buyer here and a seller here with a distance between them, the halfway point is the most liquid spot. So if one contract is trading lower and one contract is trading higher and they're trying to meet each other, you have basically sellers pressuring the market in one contract, buyers pushing the market in the other, and they kind of smash into each other at the middle, you know, because of the hedging that's auxiliary to the contract is also trading on things like options and ETFs that don't have contracts that are different values. So that kind of centering of the two around certain derivatives that don't have different contracts tend to make that middle point a breeding ground for other things that are trading. Like the midpoint here is going to have SPX options, calls, and puts like going heavy right there at the middle. You're going to have SPY ETF going heavy longs and shorts at the middle, which will cause the futures to react violently. So I've taught webinars on this effect. It's a pretty cool effect. Long story short is that it acts as a support when it really doesn't have anything to do with the futures themselves, like the supply and demand. The hedging around the index creates volume here in both contracts simultaneously. So if like the EPM trades to right here, you're going to see high volume across all contracts, and this one's going to bounce, and all of them are going to bounce to try to fight that level. It's a cool effect. Long story. Well, again, like I said, I'm going to lose viewers if I keep talking about the math of this stuff. You know, I should just be screaming like SPX to the moon and not teaching anything. Sitting out today, rollover gets weird. Yeah, I may take a long MHP on IBM. I would say that that might not be a terrible idea. I do like the MHP support idea. So everybody see here, using Rocket Scooter platform and tools, I am expecting the market to resist this half gap and trade towards lower DD. This looks like to be the preferred trade. As you see Papa Baronet come here and throw a long at 81, like I was talking about. Maybe I should, maybe I shouldn't, but no, I don't like it. We'll see what happens at this midpoint. But remember, when we get here, Nasdaq is in DD band break status, so we're in irrational market, so be very careful there. I've got such an engineer brain, man. You understand the process of everything, Crims. Love you, bro. Well, I don't know. Like, I don't like to sit here and just look at things at face value. My money's at stake. I better know what's going on. And if I don't, I'm going to dig out and try to figure out the best way I can. I appreciate. Where is my... Oh, wrong email inbox. Let's check this one. Did they write me back? I swear I wrote them. Which email did I write them in? Oh. No responses yet. Yeah, he's like, there's really nothing magical about this number in this contract other than when the curves flip, you're going to see like SPY and SPX options like react violently. Contango is hedged and backwardation is hedged a lot of times. So people use futures, and it's a whole weird thing to understand what's going on. It's because the SPX is one value and the futures are multiple values that are trying to guess what the S&P will be at various points in time. So since you have the word time in that sentence, a lot of that hedging has to do with theta. So like the theta between options at different points in time creates value at different points in time. And therefore when those contracts that are aiming at different points in time but trading now move towards each other, the kind of residual effect of the change of theta creates hedging and like options and other things. People will start, like when this gets here and starts trading lower, you're going to see a frenzy in the options market, because the idea that you overpriced a future contract at a future point in time, you're not only going to see delta and gamma effects, you'll see theta effects as well. So you'll see volume pick up across the board everywhere. So an example is, let's see what happens if the S&P hits 5164 today. You can see that every futures contract, no matter where they're trading, and again, those of you that are just here, feel free to subscribe to the stream. We drop you some knowledge bombs all the time here. If all the contracts are trading at different points in time, they're all like this. Let's just make up something. We'll just say like H is here, Z is here, or H, K, M. I don't know. I don't even know what the other ones are. I never remember the contract codes. Z is one of them. Let's just make up some numbers. U. Okay. So like when the M contract hits this volume spot, all the other ones are trading similarly, maybe at different rates, but they're all kind of trading down. When M is going to bounce, you will see all of them bounce, and you will see volume spike there. Whether it fights and holds or fights and loses, all the other contracts will trade with similar behavior. And that has to do with the fact that all of them are moving down. H is aiming for a certain point in time. M is aiming for a certain point in time. Further out, this aiming for a certain point in time, further out and further out. But all of these are guessing where one thing is at different points in time. So then what's interesting enough is when M hits here, the SPX, the thing that they're tracking, will start to move. Because if you think about it like this, if you're trading SPX options, you may use futures to hedge. Well, if people are trading futures, they may use options to hedge. They're all connected in a way. So when futures hits a key level, starts to trade lower, you'll start to see that volume pick up here. People will likely run into SPX puts, expecting that the forward curve is going to flip to backwardation. And that creates an effect across the board. And it's a neat thing you'll see. So I hope we see it today, because I'd like to prove this to you in real time. This is something we like came up with on paper back in the early days of looking at Triple B and some of these other things that we look at, DD bands that are all based on futures and margins. And we noticed that phenomenon, and we just came up with the reason why. It's because if futures hit here and that volume picks up, people are going to rush to buy SPX options and SPY options and SPY itself, which in turn circles back around to have the hedgers of those sold options to come buy futures. So that creates the volume in futures. So in the lineage of this sits here. You will see volume pick up here in all contracts across the board. Whether it holds or not won't matter. You will start to see, if you guys are using unusual options or unusual order flow programs, you'll start to see some unusual order flow in both the SPX and SPY, especially in the options. And the seller of those options, those market makers, will sell those options and then buy the shares of the underlying to hedge. But some of them will come and buy the shares in futures, which is what creates the volume in futures to begin with. Typically it circles right back around and you'll start to see some volume in futures. So futures hit here, options trade, and then futures volume picks up and it just circles, like internally circles on itself. Neat little effect. Everything's connected. I sound like a monk. We are all one. We're all connected. No question. The more I watch, the less liquidity map seems relevant and more resiliency D seems most important. Like today, liquidity map's absolutely not irrelevant. That is, liquidity map is the most important of the tools. Period. Bear short down, it's downward pressure across the board, and you see that's what you're seeing today. Irrational markets, you don't use liquidity map. It's not irrelevant. You just don't use it as discreetly, or sorry, as explicitly as you would. In irrational markets, you can still take things with a grain of salt. The probability of hedge pressure breaks go up and things like that. So remember, in a rational market, rational is a 96% chance you resist the bear zone here. 96% of the time, you will resist bear zone and stay down here. And only 4% of the time will you exit and go to bull zone. That's the basis of liquidity map in rational markets. In rational markets, 75% of the time you will reject hedge pressure, and 25% of the time you'll break. That is the basis of what creates a liquidity map. When rational. When irrational, though, we don't have probabilities for that. We don't utilize, we say 50-50. So in irrational markets, you can take liquidity map with a grain of salt. But when the markets are rational and hedging is the majority of the activity, these things are rock solid. So to say irrelevant, I would advise you to really watch the videos, because they are in a rational market, they are the reason why you haven't seen me lose a trading day, because I would like to wait for rational markets to trade. You haven't seen me lose a trading day in this Robbins Cup. I think I lost one day maybe, because I wait for rational markets when everything lines up. So the mentality of today, you should be able to short off a hedge pressure. Yes, correct. So today, if it's up in here, hedge pressure would be the place I would short from. That's correct. But keep in mind that when you go from here to here, markets are already random because you pass through liquidity pocket. There are other rules you have to take into account. So already, if the rarer thing happens and you hit the liquidity pocket, it's random from here anyways. So the short from here is not a 75% chance of reject anymore. It's more like 50-50. Yeah. So just understand that whenever you have rational markets, those are actual probabilities. So today, it clearly looks like it's rejecting bear zone as you would expect. With the slide being red, I still don't expect it to be as high probability as it is, even though it seems to be working like a charm. The reason I didn't short off the bear zone was, again, irrational, and I don't short that more. So watch right here, watch right here. I'm in the halfway spot. VIX is starting to pick up. Let's see what we got. The ESM contract already bounced this morning at 51.66. It got pretty close, but look for the exact level. Watch. Don't even, it got close here, but watch when it touches it exactly. Watch this. You guys are gonna watch, and part of everything we do is looking at the mechanical side of the market. Like, let's see what happens here, like exactly when it touches. I usually don't trade off of this level though. Yeah. So my pivot early, because look, we have IWM at a pivot as well right here. Let's watch some activity. Let's watch the volume. See how when you're getting closer, that volume starting to pick up? Watch what happens when we get here. It should be a significant amount of volume across the board. And it usually will touch everything. Watch the volume. See, look, when it says it's going to touch everything, look at the volume and SPY pick up. Watch. Let's see if we can get that SPY chart. Look at this. Is that volume and SPY picking up? I wasn't kidding. You guys learned something today. Look at this. That volume candle and SPY is just jumping around here. Let's zoom in on this and make it a little bit bigger. Let's see if we can get it. SPY volume. Look at that volume. Look at that. I don't know why the volume's being weird like that. Our candle updating weird. You see that volume, guys? You see that volume? There's the final volume there. Relatively so. It just like this effect reaches all the way over to SPY. All the way over to, even though this is MHP at the same spot. Isn't that pretty cool, right? So you see, whenever you touch this line, that volume picks up everywhere. And even in Russell, it bleeds its way into everything. Watch, QQQ probably had a volume spike too at the same spot. Now again, the amount that it is significant. Sometimes it's smaller, but you can't doubt that this is the average volume that was trading, and you had a big volume spike at exactly that level in S&P. It circles all the way around the entire market. Pretty cool, right? It's right here. Again, here's your relative volume spike, slightly bigger than the rest of the day's candles for the most part, minus, this one right here. But you can see there's a spike there, and there's a spike right here. The volume starts to pick up and starts to decay in this contract, and then you'll subsequently see that in all the other contracts. Like H24, volume spike at the same spot, even though there's nothing really going on there. Maybe its own DD band was there. You can even put Amazon stock here. I bet you Amazon got a volume spike at that same spot. And that neat. It circles because the S&P circles everything's connected. So even stocks, I'm just picking random stocks, will also likely have relative volume spike there. Let's check out NVIDIA, right? It's neat to know that. There's your volume spike in NVIDIA. Again, relative to the rest of the candles around it, even NVIDIA spiked. I'm gonna pick up random stuff, JP Morgan. So that whole phenomenon I explained this morning is pretty cool, right? It's really neat to see. It'll be more prominent when we have 100% of the volume in the candles also shown when our data feeds switch over. But you'll see that in general, it's a pretty neat trick, right? Boeing. They may not all be like super high. Once you have 100% volume, you'll see this across the board. But in general, that's the trick. So hope you guys learned something today. Like and subscribe. Follow the stream. Be here every day. We teach you guys something like this every day. So here's the effect. Now let's watch the actual contract itself, like what's going on here, right? Lower DD band and DD band's broken on the S&P. The link to the webinars will be posted in the new lifetime channel we're going to make for lifetime content in the Discord. It's not made yet, but the webinar will be at 4 o'clock. So those of you, by the way, we are doing our lifetime only webinar series this week. Lifetime members only. It's content that's only available to lifetime members. It's our next level. Ideally, like we're going to have regular subscription content. and then lifetime only content. Just to add a little bonus to the lifetime package. You know, you want to be here for life. You're getting extra learning. So that 40% off lifetime deal is still going on. Go to Discord and check it out. If you're like, I always wanted to join the lifetime program. This is the lowest it'll ever be. We've never done 40%. The most we ever did was 30. Once in a lifetime, for real, that we're doing this. So you guys can join. We're gonna do a webinar series just like we did the futures content. I'm gonna release that this week. And then we're gonna release those privately to the lifetime group. So big money hedges stocks with options and hedge drops in the futures. Well, it's more like an example is like Chase. Everybody that buys one thing is going to hedge on something else, which causes somebody that sells that one thing to hedge on something else, which causes somebody that hedges that one thing or sells that one thing to hedge on something else. And each person's going to choose something random of the path. But when you zoom out and look at all the subsets of data, they're all tied to each other in a certain way. So like if you were buying SPX options from me, I can choose to hedge those options with 1,000 things. I can go buy SPY, I can go sell SPY, I can go buy futures, I could sell futures. And when I go in that other realm and buy and sell futures, whoever's there, if they're a market maker, will sell the futures to me and hedge with whatever they choose inside of that circle. And we start to look at all the millions of transactions of somebody sells something and hedges with something else in that circle. They all kind of lump together. So yeah, big money is going to hedge stocks with options or futures. The seller of futures is going to hedge their futures with options or stocks, and they all just kind of tie together in a certain way. What you mad about, Jay Hicks? What you mad about? Trust me when I say the lifetime content is not going to be something that's crucial or necessary for you to be successful using your stuff here. It's going to be extra information for those that are looking for advanced guidance, advanced trade plans. Like here, today's like an advanced trade plan. I'll teach you how to become as advanced like this in that particular series. This is using multiple rules, multiple priorities. How do I, like, why did I not short the liquidity map today, even though it's a good place to short? What was keeping me from doing that? Questions like that. Just even though you pay monthly for Pro, you'll no longer get access to everything. Yeah, that's correct. You're paying monthly for Pro subscription. The lifetime is a more expensive thing for more content. It's typical for anything that you pay for. I think I have 2 different paths for Hulu. One of them gives me more channels if I pay more. It's not, I wouldn't be upset about that. It's just normal business, I guess. But you guys are more welcome to join the higher tier program. And there's no access to everything. Be careful, because we don't promise access to everything to anything other than lifetime. That's the only place you do get access to everything. So just keep in mind. But you won't be left out, I promise, because what we teach in the Pro Plus is everything you need to know. This is more like advanced training from me personally, right? Lifetime, you get a little bit more extra, like FaceTime and interaction time. So don't be mad. Be happy. Yeah. We invented new content because a lot of people buy lifetime and they're like, we already learned everything. I want to learn something more. And I was like, well, let's start making some like advanced, like super advanced level content, like advanced trade plans, like super advanced trade plans. Like how would you trade very complex situations? If we were to have videos like that in the Pro series, even so, it'd be like bottling someone down that's trying to learn the basics. Like once the basics are out of the way, you want to get advanced, you know, and then of course that also supports what we're building here. We would like that. It's just bonus. It's just bonus content. You can't be upset that there's bonus content for the people that are most think of lifetime is not what you pay, Jay Hicks. Let's no arguing, chat. I love you guys. I love y'all. Don't think about what you pay, think about what you commit to. If you commit for life, you're committing for longer, no matter what. If you're committing month to month, you can stop tomorrow. So if you're committing for longer, there's got to be like more continued education. Like think of like you got like a doctor and you have a license or something, right? Every year you got to re-up and learn the new stuff and the beta stuff. And the like example is we come up with a new technique, right? A brand new technique. And we need to give it to some people who know everything we do already. So see, does this technique work with everything we already know? If you've been here for life, you may be very advanced on all the techniques and you'll be able to beta test our new indicators. That's one of the things that Lifetime does. So like when DD comes out, we would give it to Lifetime first, example. Because they would know, okay, like if you give it to everybody first, people wouldn't know how to use it and it would look weird and people would like complain a lot. And Lifetime people are like, oh, I've been here for 5 years, so I know everything already that they teach. Let's try this new indicator on its face, see what it's worth. And that's usually like a good reason to do that, right? Assuming the people here for life would handle a new indicator much more easily than somebody that's here for like a week, still learning all the other stuff. So that's a real good reason to have the separation there for the commitment, not the pay. If you've been here long enough, you can handle like newer, more advanced or beta content much more easily with a lower learning curve. I guess that makes sense. So don't think of it about like how much you pay. Think about it as like Lifetime in general have learned everything and have advanced beyond, okay, like I've learned everything, what's next? And so usually the folks that are in the Pro or Plus month to month, they're probably still learning the basic stuff. Not good to dump like a brand new concept on top of all these other concepts they're still learning. It kind of keeps it a little simpler and a little less cumbersome in the learning experience, I would say. So here's that volume interaction here. There's really nothing else to say other than we're breaking DD. And once this happens, I say 5139 is that lower yellow line down here. But in this case is like once we come up with the new indicator to finish that conversation, it's always released to everybody. You don't get any more indicators by being in Lifetime. It's not like you're missing out on anything. It just gets a little additional coaching. Let me try. What's the yellow color I usually pick from here? So we don't mean to let anybody feel left out. So one of the examples was DD. When the DD came out, a lot of our Lifetime group actually worked in collecting the data for us. We had this manual data collection thing. We collected data for almost a year before we even released the indicator. And we had a lot of people teaming up from the Lifetime group just to collect the data and build the spreadsheet and manually input the data just to test the DD concept by itself. So believe it or not, you have to thank the people that are committed for life as well, because they're a big part of the process of testing this. They beta tested resilience 4 years ago when we made it. They even paid $30 a month for the resilience beta just to support the development of resilience. So it's kind of like we have these, it's a great program that helps drive innovation here. Trust me when I say. So any new concepts or new things, we discuss very advanced, things. You won't be left out of anything, I promise. I appreciate you guys understanding that. But like I said, it's $4,000 and we drop it to $2,400. And that's kind of like forever. So the future content that we do make, Lifetime members get all the future stuff for free inside the platform. If you believe in what we do and you love us, feel free to sign up for it. It is by far the least expensive option, if you think about it. Where's my email? They haven't responded to me yet. Nobody yet. So inside of here in this irrational zone, since I am trading a contest, I don't want to risk it. Here's when I talk about the volume spike, you can clearly see in futures, there's that volume spike when you touch that middle area. So that's a neat thing, the thing we talked about this morning. It's a family thing. There you go, baby. It helps. It really helps us because there's a lot of stuff that we've created. You know, a lot of people here pick up a torch and they like to pick up a shovel, like to dig. They pick up a torch and they like to walk through an unexplored area. And the lifetime group is like a big, you know, big part of our development process. We come up with ideas. You know, we used to have this thing called study hall, and we haven't done it in a while because we haven't really, we've been building the platform. But back in the day, study hall, we'd get together and just like brainstorm new ideas, like these ideas here. We come up with all kind of new concepts as a group, and then we come up with like things to test and things to make. A lot of our tools were driven by that, what we call that study hall process. We all get together because, you know, our founding group was a bunch of engineers. So we liked getting together and having that like high level discussion. Monthly map bull zone. So let's go ahead and delete the rare stuff up here. Just kind of write this down. Rare, expected. You guys see how I do this expected from here to DD? That's the expected move exactly as I drew it before it happened. This would be the end of the day. Shorted from here and covered here. I wouldn't be doing any trading from here. It's just going to chop inside of this range. So we're stuck inside of here. There's really nowhere to trade from here. It's untradeable at this point. It's just gambling from here, so I'm not going to touch it. But you can see how I saw the move and I could have taken the move. It just wasn't clean enough for me to want to do it. So let's see how this works. Oh, let me leave that on there. So I'm trading for the contest. I'm going to be ultra picky about the trades I do want to take. Let's check out some monthly maps real quick. Let's see what she says. Monthly maps are actually bull pressure, so selling. So there's actually selling pressure on the bull side. You see how the bull zone slopes up slightly? Bull selling. How the bear side slopes down? Shorts covering. So both sides are exiting the trade inside of here, and we're kind of trading in that bearish zone right now on the monthly map. So because they're fanning apart, if you look at the little cheat sheet we give you, the fanning apart means volatility is increasing. So we're getting a period of more and more volatility, which means the market's going to become choppier and wider throughout the day, which means you can't jump in the middle and trade long or short, which is why I didn't do it. Volatile days, you want to hit an extreme and play the ranges. Okay, so as more volatility is present, monthly map is telling you we expect more volatility to be happening in the future. You would expect futures VIX to pick up that volatility increase. And as you can see, VIX has been trading up all sessions. So that's how good monthly maps are at telling you that exact thing to expect in the future. So it's telling us that volatility should increase over the next 3 or 4 days. And it's already starting to happen yesterday or Friday and today. So VIX is starting to pick up some steam. So it doesn't mean the market's going to sell off and be bearish. It just means we're in for a choppy week. And the choppy week with high volatility typically leads to downside. Doesn't mean the market's going to collapse out. So I'm not out there like YOLOing 0-day puts, so I get crushed on IV or theta. I am knowing that I'm going to be very cautious taking longs unless all the signs point up. The weak stock buybacks get locked out. Oh, Travis. So there you go. There could be a reason for that. Chase, considering selling back the option is is there a way of playing option content in the future? Maybe create options content in the future. But like we always encourage people, because Ashton, his program is really awesome. Ashton's stuff is great. Like he did, like, go buy his package. Like that's what we want to encourage people to do, like to go buy his Discord. If you want to buy Ashton's Discord, send me a message directly, because we're opening it up through the marketplace. I'm going to give you a way to buy it to get access to his content. Instead of me making options content, I'd love to drive people to his options content. It's really good. That's why we work with him. His stuff is great. So it's only $20 a month. It's not bad. I encourage you guys to go support our friend over there. Look at Apple monthly maps. Yeah, let's go. Yeah, action stuff is great. I mean, so for his, like, since we're on the marketplace now, everyone's products are separated and for sale instead of like bundled together in one place. So we're a la carte, like Rock Schooner, we're gonna a la carte everything going forward. Liquidity map, resilience, DD, you're gonna purchase them all separately instead of like them be bundled together. So any additional content or additional teachers, all their stuff will also be listed separately. It's to make things more affordable for people and accessible to people. Like, people may join my program and not care about options. Well, why pay for it? People may join his program and not care about liquidity maps. So why pay for it? It's the idea that everybody's going to list their stuff separately. Yeah. So I might not make options content, just FYI. But I will feature some options content creators. So Apple monthly map. $170. Apple is in bearish monthly territory with the bear zone staying flat and the bull side selling. So if you think about it like this, you can say it like this: bears are holding, bears are staying the same, holding, no change. Bulls are selling and then buying the dip. Buy the F and dip. So Apple is primed to likely sell over the next week or two before it buys another dip. When I see monthly maps like this, I tell myself there's another leg down. Bears are holding the fort. Some of them may be covering from here to here, but at this point, you can see that there's going to be selling pressure over the next 2 weeks. So it's likely to do that and then turn around. So we might get like a 2-leg downside move in a lot of these places. Lifetime members have to buy liquidity maps separately. No. Lifetime members don't have to buy anything. Lifetime members will get all the things packaged for free. Does that make sense? So like, or for free. So example is like, if you have to buy everything separately, lifetime members will get the credit to buy everything separately, but for free. Though when we transition you over, you'll just wake up one day and it'll all be in your platform. You won't have to notice, and you won't notice the difference. It's all done on the back end. So yeah. Does that make sense? So an example would be like, if we have products like A, B, C, and D, and each one of them is like, let's just example, $20 each, right? Liquidity map, monthly map, we sold them all for 20. We have a thing, we actually call them bundles. Bundles where you can bundle up things together. And we'll name the bundle Lifetime. So all of you, pretend that you haven't bought it at all. If you buy Lifetime, it comes with each of those products for one price. And those of you will be switched to that bundled product with the coupon that makes it free on the back end. So you'll buy everything individually, but you'll rebuy it for free. And you'll just wake up one day, it'll look exactly the same. The website will look different. All your stuff on the back end will look different. Your dashboard will look different. But your platform will be exactly the same, and you won't get charged anything for that switch. So the idea is that some people will join our program and just want to use like a couple of tools, and that allows them to have the flexibility to buy the tools individually, or vendors like myself can bundle them together for a fixed price. Those of you in the Pro Plus monthly, it's going to be the same price for all those things. We're going to bundle them together and call it Pro Plus Monthly. And it'll be the same price you pay for the same tools you have. And again, it'll all work out on the back end. When the marketplace is going live, marketplace is live right now, actually. It's live in beta testing. We have some vendors that are testing on the back end. We're doing market testing and beta testing before we launch it live to the public. So it's actually live right now. It's actually taking sales right now, believe it or not. We're just not announcing it just yet. We're getting our vendors signed up one at a time. We've got, we're going to be launching the marketplace with 30 vendors. of all different capacities. And then we're going to have a public launch and a public application process for people that will also become vendors. At first, they're going to be selective as to who initially comes on, and then we're going to have a process for applying automatically. This is super exciting. I'm excited, guys. If you want to check out Ashton's services right now, send me a message in Discord. I'll give you the link to Ashton's product from our marketplace link. You at this point, you can buy it from the marketplace. And that'd be where I want you to get it from. If you'd like to grab his stuff off of my recommendation, send me a message, you guys, and I'll link you over there. If you guys want to support Ashton, support the marketplace, I'll give you the link to do so. Am I in a position? Zero trades today. The market's untradeable and irrational in DD band break. This is the end of the day, and I don't really see any reason to touch it from here. I called a downside move. I watched it move down, and I didn't touch it. Unfortunately, it was kind of crummy. Yeah, like a pause for a lower move. I don't see, like I said, with the volatility in tech kind of on the way and the liquidity map's kind of looking funky. There's really no clear, like there's no clear path, right? It just looks, this looks like selling pressure on NASDAQ, like the bear zone's pointing up, the bull zone's pointing up. So I do feel like we're going to get some volatility here. So I'm not exactly excited to long this market from here. And it'll be fun to see like how this plays out. You know, the bull market's still here, the bigger bull market, but this is certainly a local top. It feels like it. So that kind of nice little clean bull run we've been seeing is pretty much over. Any upside today is limited. I don't think we break 512 and keep going. I think the market's got to relax a little bit. Yeah. Yeah. We do encourage you guys, if you really want to support the group, though, support the Lifetime group. We would love that. We do this every once in a while, and it doesn't ever get. It's always, like I said, I think it's worth it. You guys want to learn everything we do and be around, you know, have the product for life. You'll survive all, you know, price changes and everything, you know. And it's really nice. It supports the developers too, you know. It's a good thing. Helps the business grow, etc., etc. Yep. Last thing before I get out of here. UVXY has monthly hedge pressure to kind of crush a little bit of volatility today. Like I said, I'm not sure if there was a short from here to here, that would end the day. So I'm not really touching this anymore from here. Can I post the NASDAQ yellow lines in Discord? Oh, I don't really do them all. I just do the S&P ones. But you guys are welcome to post them. I can make sure they get into the right channel. Oh, Garrett, that's really nice of you. Yeah, see, there's that randomness around here. It's real, like I said, it's really hard and very volatile and really hard to trade. It's like just impossible to start picking levels down here. There's nothing it's bouncing off of. It's just volatility, you know, collapsing. That market tightened up a little bit. But like I said, it's still dangerous. This is all dangerous setup. We gotta like how that expected move, which was here. This is exactly what I drew this morning. Rare to break DD band and keep going, which is why it's not collapsing and falling. Actually, just about right there. Like that. So this was the range to trade in. There's really nothing to long off of. It's just kind of like stuck in here. So with that, we'll call it a day. We'll be back. We'll do the webinar tonight at 4 o'clock Eastern. No trades. Again, like I said, I don't take every trade. I like to be very selective. This is Robin's Cup, trying to aim for first place there. Made it to the leaderboards, technically. Should be listed there today. In 5th place. So look at that. Everyone else got a 2-month head start. Crushing it. Beating all your favorite gurus. None of them made it. Wish me luck. Hopefully I make it until the end. See y'all later. The lifetime, yeah, there'll be like a lifetime section on the website when it's all said and done and posted there for lifetime only. Yep.